Vinit Sambre is our next guest on the show. He's head of equities at DSP Mutual Fund. And of course, he's spent a long time in the market to see many such cycles play out. Vinit, great to have you on. Let's dive straight into this whole debate on mid caps because people are really wondering what to do. Those who are still holding on to profits are wondering whether I should sell now, sell at a bounce and protect my profit. Those who haven't dabbled in are wondering if this is a great time to start buying mid caps. What would your advice be on the broader market?
So, see, I think we have seen in the past as well that the small and mid caps in general, when we look at the market falls, the small and mid cap tends to underperform the large caps by almost a margin of 1.5 to 2x. So if the large caps are, let's say, correcting down by 10%, small and mid cap will have a higher burden to sort of bear. Because anyways, when the bull market is there, people are exuberant. They try to, take the valuation significantly higher on the small and mid cap. And we see a lot of bad behaviors also in terms of the quality of stocks. So I think it is natural that when things correct, this is going to correct down slightly more than what the large cap does. But also in the past, our analysis suggests that in these kind of markets where some kind of panic sets in. I'm not calling a full-blown panic out here, but some kind of panic which has led to this fall. It is always good to start with an SIP because, what will happen is that in the course of this correction, one will keep averaging out and accumulating the NAVs at a lower point. Because one important aspect which has to be kept in mind is that for us, the ultimate objective is to, capture the India's growing, growth, being a growing economy. And as far as small and mid caps are concerned, I think the companies have also emerged stronger. They have become leaders. This whole consolidation has led to many companies becoming, very capital efficient also in the process. So I think if we keep following that discipline over the course of the period, the investors will definitely see fruits. But I think at the moment, the narratives have changed totally. We have, from a virtuous cycle, we've gone into a vicious cycle.
Yeah.
Some more pain, but I think that's how one should sort of think.
Okay, of course, you have to be reasonable and keep the medium to long term in mind. Vinit, what have you been doing in this fall? I mean, even to your, different schemes like Flexi Cap or, the other schemes, have you been adding on the mid cap, large and mid cap side of the, funds? Have you been in the market buying more of mid caps and small caps, or as a house, is the preference towards large caps now for you?
So I think in general, across the categories during this period of market corrections, we're trying to see that can we make some switches and rebalance the portfolio. Given that we are calling out for the next growth trigger being, let's say, consumption, given how the government has been trying to showcase that in the budget, and investments sort of has taken a backseat. So I think not sort of taking a big call around the asset allocation from the large cap, mid cap perspective, but more from rebalancing from the sectoral perspective is what we're trying to sort of look at.
Got that. Good to speak with you, Vinit, and good morning. It's the old argument that you just ride up and down, and long periods of history do tell us that that's the way to go. They don't try and, sell or create cash too much. I mean, by the way, did you guys do that? Because I was having this interesting chat with an old veteran money manager who manages his own money now. He was saying, well, sometimes excesses are so stark that as an institution, it's tough to do, but as an individual, maybe, things just don't make sense. And you create cash because only then will you be able to buy at the lows, because what comes after lows are better tidings. But if you're fully invested, then you just sort of play it out, ride it out. And I suspect many find themselves in that situation. Just wanted your thoughts there, Vinit.
So, Prashant, in general, we have always remained largely invested, but especially in case of small and mid caps, we have been on an average between 4 to 6% kind of cash levels we've kept. That is in general a practice because anytime, during even bull market, there are cases where stocks fall and we would want to keep that as an opportunity, and also from the liquidity perspective. So cash has a slightly different sort of a strategic thought process out here. But from the investment perspective, we do not want to take cash as a strategic call, because if you look at the last 20 years, the small cap, let's say, index has delivered between 13-14% return. If someone would have had 6-7% cash, that is a drag on the overall return over a long period of time. So when investor is actually giving the capital to us to invest, I think we principally think that we have to keep remaining invested broadly, and cash is more from the liquidity, and as you mentioned, bit of this opportunistic type of strategy is what we sort of go by.
And we get the MF numbers today, Vinit. Flows have remained absolutely steady.
Yes. So I checked the numbers that till yesterday. I think broadly the flows are trending on an average the same levels what we were. But I think so. I think, Prashant, this is very interesting because the behavior is going to let's say lead to, if we are calling this pendulum swinging on the other side, that's going to be the investors' behavior. And I think till now it is all good, but we don't know last 3 years, as we keep saying, that new investors have joined, and their ability to sustain or stomach this volatility will watch over the course of next 1 or 2 months. But this will be interesting from the market's volatility perspective as well.
We had Atul Mehra with us, and he was saying $55 billion worth of insider selling this year. 55 billion. And I asked him whether supply will perhaps overwhelm demand. He said, well, that depends on SIPs and retail flows, which you are saying so far is steady. But it's
so
that 55.
Some bit of SIPs have incrementally slightly increase in the redemption or stoppage of SIP, but I think broadly we shouldn't be worried as of now.
Okay, all right. Hi, Vinit. I recall towards the end of last year, you said you're not expecting the markets to dance away to new highs. And as of now, the market is worried. How low can we go? Do you think bulk of this pullback that we have seen on the Nifty, it's 10% thereabouts, the mid and small caps, indices are down close to 18 to 20%. But individual stocks have seen a bigger correction. So how much more pain do you believe is in store?
Yeah, Nigel, I think you're right. Let's say if we just go by the arithmetics, today we are at 19 times on Nifty, let's say broadly, and we've corrected by around 12-13% from the top. We assume that, let's say, 17-18 times is the base kind of valuation for the Nifty. Then we have another maybe 8-10% but I don't think that's a big number, because the broader market will see even more impact. But I would say that a correction is there. Maybe if we get new triggers in terms of, let's say, consumption starting to show up, or there is some visibility on the other, which today is not there.
Vinit, just missed that number. 8 to 10% is?
So what I'm saying is that today we are at 19 times.
19 times, yeah.
And assume that if we go down to 18 times, and there is 1,000 point more to be given up from the Nifty's perspective, which is let's say 5-6% kind of a number. And 17 times, I think it is difficult, but markets one can't predict. But I think that is what one should go by. Like you said, Nigel, more importantly, if you look at the broader markets, we have seen more than 50% of the stocks actually correcting by more than 30-35%. While they are not cheap, but I would say that a large part of the correction has sort of taken place in the broader market. At some point, it should consolidate, is what I feel.
Okay, so Vinit, what you're saying is that maybe another 5 to 6% of a downside on the Nifty could be possible, but the bulk of the mid-cap pain perhaps has already played out. So that brings me to the interesting question. What are you buying? You mentioned consumption, that in the rebalancing you've added some consumer names. So if you could be a little more specific in terms of, is it discretionary, is it the hotels, travel, those kind of names, is it jewelers? And beyond consumption, I mean, what else? What else have you sold off a little, book profits in the rebalancing? And what would you be comfortable now gradually buying?
Yeah, so see, industrials, because of the change in the capex targets, we have been sort of, and the expectations are high, the valuations are high, and hence we have been sort of lightening up on the engineering part. And some part of that is getting into consumer durables, let's say, more discretionary, because we feel the benefits which will flow in because of the tax benefit should give some kind of impetus to the consumer discretionary. And on the other hand, I think some of the segments are non-linked to any of these aspects, just like hospitals, they have been delivering good results. Insurance sector has already seen the pain, and a large part of the regulatory changes, be it surrender charges and all those, after bearing all that, I think insurance businesses are stable. stocks are down. So I think those are the segments which one can sort of focus on. And incrementally, I would say, and I keep saying this, banks are cheap, but they are also going through a bit of this transition, name resetting, asset quality. I would, we are watching that space maybe 1 or 2 quarters, and that space would also start looking interesting, which is a big space to own sort of.
Okay. If you own hospitals in your portfolio, Vinit, you may want to listen into the next conversation because we have the management of Medanta joining us. Thank you very much for joining us with that perspective, Vinit, and speak to you soon again.